At the time I'm recording this, it's been just 1 week after the JSE Simplification Project went live on the 13th of January 2026. And while it's early days, the market reaction has already started to shift sentiment, especially among the African retail investor community. Let's first get a basic understanding of who we are referring to when we talk about retail investors. See, retail investors are people or individuals who are not companies, who are buying and selling securities for their personal accounts to meet their own financial goals, such as wealth building. Most retail investors use brokerage accounts and other platforms for smaller scales of transactions when you compare them to the institutional investors. So why do retail investors matter so much? Well, before the Simplification Project, many prospective retail investors felt locked out of equities ownership. Most of the participation in the South African market was driven by institutions such as pension funds, asset managers, and foreign investors, while household participation in the listed shares remained very, very low. One academic study suggested that less than 1% of households actually own stocks or shares directly. This low participation rate shows a huge untapped opportunity for everyday Africans to benefit from wealth creation through public markets. But that's beginning to change now. Platforms like Easy Equities and Purple Group have demonstrated that retail interest does exist, with Purple Group alone building a shareholder base of over 150,000 retail investors, making it one of the largest retail ownership bases on the Johannesburg Stock Exchange after companies themselves. So retail investors are here, but historically, they have been underrepresented relative to the market's overall size. How does the JSE simplification help retail investors? See, the JSE Simplification Project was designed to make it easier and cheaper to list companies and to understand the rules of governing investment products. For retail investors, this matters because more companies may list now, and with clearer regulations, smaller and mid-cap companies can now see a practical path to their first initial listing. Reduced regulatory complexity lowers time and cost for issuers, which means faster listings and more choice for retail participation. Greater transparency in requirements help everyday investors understand what they're buying, not just trade on speculation. Market sentiment reflects this early optimism. Since the simplification went live, the main JSE All-Share Index has held steady at near record levels, indicating that confidence remains strong even as structural reforms are implemented. While it's only been a week, brokers and dealers' commentary suggests increased discussions around potential new listings and renewed interest in the sectors previously considered too complex for retail-focused growth. Anecdotally, investor forums show growing chatter about first-time share purchases, a signal that everyday investors are watching this reform closely. But why does this matter for retail investors? Let's break it down. There's going to be better prices over time because there's transparent regulation contributing to better price discovery and liquidity, benefiting both short-term traders and long-term traders. Ownership for real assets will increase. Retail access to commodity, industrial, fintech, and consumer stocks spread ownership across the economy. And the last point leads us directly to one of the most tangible examples of what retail access means in the mining sector. Let's look at why the mining sector could be a natural, perfect fit for retail investment. South Africa's wealth has historically been built on its mineral resources, from gold and platinum to iron ore and manganese. Yet, despite this, the mining sector has a surprisingly modest presence on the JSE relative to the economic importance that it holds. Today, there are approximately 34 mining companies listed on the JSE, with about 15 of those having their primary listings on the JSE. Meanwhile, there are hundreds of mining companies operating in or connected to South Africa, many of which are listed only offshore or not listed at all. Imagine what that could mean for retail investors if more mining companies took advantage of the new simplified JSE listing requirements. Retail investors would gain access to shares in companies that own real tangible assets, a chance to participate in the wealth creation that comes from resource extraction, and diversification beyond big banks and consumer stocks which have currently dominated the market. Yes, the mining Indaba is buzzing about capital market access and listing reforms, but will they also be talking about how the sector could finally give retail investors a real piece of the country's resources and wealth? AfriTenacity will be watching closely, so subscribe to the channel so you don't miss out on our input during the Mining Indaba Week in February 2026. If you are seeing this after the Mining Indaba Week, do catch up by watching the videos which will be linked in the description down below. Because retail investors haven't always had an easy path into mining equity, but the JSE Simplification Project could open that door wider for everyday Africans to own their wealth. The JSE Simplification Project isn't just bureaucratic red tape being cut. It's a structural shift that potentially welcomes more listings, strengthens choice and liquidity, encourages retail participation in markets historically dominated by large institutions, and brings sectors like mining closer to everyday owners. For many retail investors, this could be the beginning of a new chapter, and one where stock market participation no longer feels distant or intimidating, but accessible and meaningful. Now here's the thing. Even after everything we've just discussed, the JSE simplification, the opportunity for retail investors, the shift that could happen, there's still a massive problem. And the problem is that the African mining ecosystem is still structurally built to keep retail investors out. And if that doesn't change, everything that I've just explained will remain untapped potential and never become the reality. In this next video, I break down the mining ecosystem and why mining companies have historically avoided retail investors. So make sure that you watch this next video. You will also find it in the description down below. Because without fixing this missing piece, African mining cannot fully unlock its future capital. This is AfriTenacity. We're here to translate the African industries into capital narratives, elevate retail investors into informed participants, and help African industries reclaim power in the global markets. Subscribe and share this video if you found the information to be valuable. And like the video so that YouTube will show it to others who will find it just as valuable as you do. I'll see you on the next one.